What's going on, guys? Welcome back for another episode here of Let It Grow Investing. I'm Jeff. We're going to get caught up on the market. We're going to do this at rapid fire. I just recorded like a 40-minute session, but it cut off about halfway through. And you know what? I don't really feel like figuring out where I was and re-recording. So you're getting a brand new, hopefully under 20-minute podcast so I can just rapid fire all the news you need to know. Market's up. Market is up. We are above 7,100 on the S&P 500. We closed Friday at 71.26. If we look back, we were at 6,300 like 3 weeks ago, guys. A rapid turn, right? The Mag 7 was out, tech was out, software was out, pharmaceuticals have been out. And guess what? We are looking at them all coming back and just rearing back up and just saying, you know what? We're back. We are back here and we are not letting down. So we're going to take a look real quick at some of these names that we follow so closely here. And we're going to try to see what is out there, right? Well, yeah, a little old AMD, right? I've talked about this one ad nauseum. We have been all over this. We were at 196 on March 30th, and now we are at 277 after hours on Friday. A massive run for AMD. Not as massive for NVIDIA. They're up to like 190. No, they're up to 200. It was at 190 at the beginning of the year. There's a lot of movement here, right? So my point is we were all fearful around this point. April 7th was supposed to be the end of a civilization. Well, that got kicked down further. Strait of Hormuz opened back up. We have oil flowing. We've got people printing money. And now we have got a little bit of fear in the market as to what happens with the Strait of Hormuz. Iran saying that the U.S. isn't agreeing or not following all their ceasefire or their peace deals. We've got Lebanon and Israel kind of getting at a ceasefire there. And there's a lot of different news going on. So right now, my point is don't always run for cover when things look crazy. You know, if you look back and you look at Afghanistan and Iraq and all those problems, remember those 20 years that we had all the problems in the Middle East? Well, guess what? The market still went up. So just because there's conflict doesn't mean that the market can't rise. If you're long the market or you're long Wall Street, the fact that the economy is still churning out gains means that you can still be making money in the market. As violent as sometimes these problems are, I just want to point out the fact that Wall Street and Main Street don't always line up, right? So if that VIX spikes up as it did on April 6th and I was getting some money in, we were looking at things to buy. We were doubling down on the investing challenge purchases. We bought Microsoft and Celsius one week. The next week we came in, we bought some Salesforce, AMD, and Amazon. Then we bought some more Nike, right? We bought Nike and Tim Cook and Elliott Hill. If we're looking at this thing, we can look at this insider activity. We are looking at $2 million buys from a CEO and a director. Tim Cook, being the CEO of Apple, is on the board of directors, 1.1 million. And then Elliott Hill, 1,000K, which is $1 million. I don't know why it doesn't just say that. But that is what we're looking at, guys. We're looking at them buying in between a range of 42. Well, this was right at 42, also at 42. And then a director, John Rogers, at $43 per share. I was right in there buying with them, although I bought like $500 worth, not $1 million worth. So we're not the same, but we're the same. You know what I'm saying? I was right in there with Tim Cook buying on the same days that he was. You know, we're just two peas in a pod. So that's my point. We can still be buying on our own scale and dollar cost average. And if it goes down 20% and you think this is still a stock I want to be invested in, dollar cost average heavier. Don't just simply run for the hills. There's too many people running for the hills. Understand that it can be a gift. The whole Mag 7 sold off, guys. Are all of them just straight garbage because something changed? AI was out of flavor. We just simply not liking Amazon anymore. We had all this talk of Anthropic, and we had, Tesla's making their own chips. Amazon's doing their own thing. But then we realized, SanDisk is up, 300% in this year? We have Micron up crazy. We've got AMD up crazy. SanDisk, sleepy little SanDisk. What's the ticker? SN. Yeah, that's it. That's the one. That's what we're looking at. Oh, yeah, we're just at 920. Where do we start the year? Refresh my memory. Who knows who's got that news? Oh, I got that news. Let's take a look. Where are we year to date? Oh, yeah, 275. Sleepy little SanDisk, Yeah, and now it's 135 billion. But 600 points ago, it was probably at like 40 billion. So it seemed like a smaller company at that point. Now it looks like a massive player, simply because people are running out of chip stocks or out of software. Micron is the big dog here. They're $513 billion. Year to date, they started at 315. Now we're at 455. That's not the same move, but I feel like that's a safer play for me to be in Micron than in SanDisk. I think Seagate was similar. Is it? Why do I want to say it's STX? Is that it? It is. All right. Yeah, test my memory there. Seagate, of course, it's STX. They also had a pretty solid year so far. Where are we on Seagate? We are at from 287 to 547. So, another small little move on some chip stocks, right? My point is, some of these small cap names have gone crazy. People were running out of them as fast as they possibly could. And now we're right back in them because we see the value. We see that AI isn't going anywhere. We see that there's a chip shortage. We know that people need them and the spend is there. I forget just who reported on Wednesday or Thursday, but they said the same exact thing. We have a shortage of chips. We need all of them. Who can make them? And this is what is going on. So everyone's starting to do their own thing. There is still enough appetite for chips that everyone can be a winner, right? It's not just a zero-sum game. There are multiple winners. There is people that are going to do better than others. Some of these stock prices are going to fluctuate more because they're smaller companies versus some of the bigger companies. But then we've got those outliers like AMD that are just going to have that 70-point run in the matter of 3 weeks. And we saw that. And we're going to continue to see stuff like that. So I'm looking at these things as opportunities. We are looking at AMD. We see it here on, we can even just look at 313, right? That was 193. That was like $84 ago in a month. That is a massive move. And yeah, 453 billion. So Micron is bigger than AMD. Nvidia hasn't had quite the same move, and it's also the big dog on the porch, right? So for Nvidia to just spin around a 40% gain, it's done it before, but you're talking about a $4.9 trillion company compared to something that's 130 billion. Yeah, they're not as nimble. They just simply aren't. It's just easy to do the math there. You're not going to get the same gains out of this huge dog on the porch rather than that little one that can just kind of flip a switch and do something different. NVIDIA would have to just have a massive new facility and just the purchase orders all built in, and they have it, but they aren't having that exponential growth that some of these other companies are having by simply saying, yes, we make this chip now. So yes, NVIDIA, still a great stock. I'm not taking anything away from them, but they're not going to be as nimble as a Seagate or a SanDisk when it comes to how quickly they can just increase from 100 chips to 200. You got to look at NVIDIA is doing 2 billion to 4 billion or whatever, right? So the numbers aren't quite the same. So that's what I'm looking at there. So we've got that. We got a lot of different things. I'm looking at Nike. Yes, I bought some Nike. Yes, I bought some CRM. I bought some different things. I was getting invested as the civilization ending comments were made. Now, I truthfully do believe that comment was not that we're going to just wipe out all those people off the face of the earth. I don't think that it meant that. I think it was a case of, yes, we're going to attack their telecommunications. Yes, we're going to attack their water. Yes, we're going to attack anything that we can do to shut the civilization side of it down. We're going to take you back to the Stone Ages. We're not necessarily going to just eradicate a whole population, which I don't really know that for certain, but I think that's the kind of nuance which I think Trump can just rattle off. That sometimes it just seems so mindless. It really does. It just seems so mindless of the things you say and then really what is meant by it, right? So we are looking at what happened when it comes to the psychedelics and psilocybin. Hopefully this does have a huge effect on a lot of people that are addicted to opioids or going through PTSD or depression. Hopefully we can get a lot of these different new treatments into the hands of people that really need it. ibogaine, ayahuasca, all the stuff that if you follow Joe Rogan or if you follow Robert Kennedy Jr., they've been talking about these things for a long time, right? We're looking at getting these things done quicker. I don't really know who benefits from this, but I do think that some of the pharmaceutical players would be in that area of these different, I don't know that you can really get patents on things like mushrooms, right? I don't think they can patent that. So there's maybe not as much gain there for them as I'm thinking off of first thought, right? That's just kind of where I'm coming with this. If you can't patent it, it doesn't really make it your drug. They could maybe put a name on it and sell it, but I don't know if they're going to be treated like pharmaceuticals, if they're going to be treated like over-the-counter stuff. I'm not too sure what this means. I think it's a lot of gray area. I don't know who benefits from this, but I do think that pharmaceuticals could be the next wave, as we just showed that we got back into tech, right? The NASDAQ is roaring. A lot of these stocks we just talked about, the Mag 7, are just rolling up nice. I do think that pharmaceutical stocks could be next. So, yeah, I'm looking at AbbVie. I'm looking at things like Eli Lilly. I'm looking at Gilead or Abbott. AbbVie, right? We're here. We were at like 205. I think we're about flat, but we have traded down, right? That's kind of my point. Is we were at 244 in October, 233 at the beginning of March. Now we're trying to set some sort of base in here. It looks like we hit 205, 206. 2079. It looks like we've got a triple bottom here, and then maybe we do break out to the upside. We have hit the support. We didn't crash through it. We didn't set lower lows. We also didn't set higher highs. So we had a high here at 217, and then we had a 211. So I think if we can't break this 211, 212, I think we could go break down below this level of support at 205. But if we can break out above this 215, 217 kind of territory, we could find new highs, right? We could be back up to this 240 in no time. So there's a lot of things to take into consideration here. I do believe that some of these pharmaceutical stocks could be purchased. I'm not just deciding that this one is the one to get. I'd have to dive a lot deeper. We're at an 88 times multiple on trailing 12 months. I don't know what the future 12 months looks like. We do have a 3 1/3% dividend, which feels comfortable. I do like that dividend on AbbVie. I think I originally got into it when it was around a 4% dividend yield, but I'm not hating on 3 1/3%. That seems reasonable, right? So that's where I'm at right now. We kind of got away from some of the utilities, some of the oil and gas, some of that kind of steered off. But then we've got the problems with Iran, Strait of Hormuz. Is it going to be shut down come Monday morning? I'm not sure. That was the last talk that I heard, is that Iran's going to shut it back down. But it doesn't really seem like the rest of the world really wants that. So I don't really know where we go from here. So could oil spike again? Sure. Have I seen prices on flights come down and then go back up? Yeah, I have. I'm not happy about it because, summer travel is going to be affected, but better than some of the alternatives that other people are dealing with. So I'll take my first world problems and, cry in the corner. I don't know. I'm just saying that it could be much worse. I'm not trying to downplay the fact that, flight prices are rough for us and we should all feel so bad when other people are, literally out of their homes and, dealing with loss of loved ones. So I'm not trying to make light of that, but I am watching what happens here. Right. So that's it. Right. I do believe in the pharmaceuticals coming back up. I do think that oil is going to stabilize somewhere, hopefully in the $70, $75 range per barrel, not 100 or 150 like some people were speculating that we would get to. But we did kind of call this, right? We called the fact that the market can turn on a dime. A lot of these stocks rose on really no news, right? Yes, we were saying, the war is getting close to an end, but is that it? I don't think so. I think it was really a fact of the matter of oil prices coming down is why the stock market started to roar. Because the missiles are still flying. There's still problems. I'm not saying that the Iran and U.S. ceasefire, but then you still have Israel, Lebanon. You got a lot of other problems out there. And I saw something else with Ukraine and Russia. I forget that headline. I'm sure you could do a quick search as to what happened in the last couple of days there. I'm going to go ahead and close this out. We've got a lot of different things here that are still a problem. But I think the world economy more worries about the price of oil for everyone than simply some missiles being launched from here to there. And I know that sounds awful, but the price of oil affects everyone, and those missiles affect a select few. And that is terrible. However, it's truthful, right? I mean, I hate to say it like that, but that is what we're looking at. A lot of people are affected by oil. A select few are affected by the missiles in the area that's being the war zone, right? So when I said, I know that not just Trump, but all politicians are worried about the money. I do mean that, right? And the fact that the market went up simply because oil prices went down, but there's still warfare, kind of leads to the fact that, yes, the world can still be in shambles and the market can still go up. I'm not saying it's a peaceful place out there. What I'm saying is that if oil prices come back down, everyone gets a little bit of relief. Everyone can spend that money elsewhere. So that's what I'm looking at. I'm not happy about the problems that we face or the things that we see, but we do see that the market can rally on the back of still really being in a war in multiple areas of the world, and the thing still just kind of rolls higher. So I did say that he was tied to money. I do mean it. I think a lot of politicians are tied to the money. The market is tied to the money. They're not necessarily worried about the strife of a select few people. And Wall Street's just going to keep on doing its thing. They're going to keep predicting what's happening 3 months out, 6 months out, a year out. And the market is going to trade off of that news. We've also got bonds, not being as strong. So people are rolling back into stocks. We're seeing that as well, right? So there's a lot of different things that kind of go hand in hand with everything that's going on out there. But we're going to get back to our little corner of the market, and we're going to take a look at Netflix. Netflix is one of the stocks for the investing challenge. We were at 91 at the beginning of the year. We dipped down into the 70s. We were at 75 on the February 23rd. We got up to, let's call it 107. And then, when we're looking at this, on Friday, this thing drops like a tank, right? We're down about 10% on really not a whole lot of news. There was earnings. They beat estimates on revenue. Oh, I had this pulled up earlier. Let me see if I can't pull up the same article. Netflix went down on the fact that margins were looking similar. That was the big problem. What caused this thing to go down 10%. This was not it. This is not the one. We had a stock rally fades quickly. This is the merger with Paramount, Warner Brothers Discovery, the fact that they were getting billions of dollars, marking their steepest one-day decline, drop in nearly 6 months after a disappointing second quarter outlook overshadowed an otherwise strong first quarter report. Decline also erased a chunk of recent gains since walking away from its proposed deal for WBD. Stock had surged more than 28% as investors cheered the decision to avoid a complex, capital-intensive acquisition. I don't really find this to be that concerning, right? It was a margin call, not a margin call, but a call about the margin that Netflix was going to be able to post for the next quarter, right? They are going to be able to maintain the same margins rather than increasing them. So we sold off at 9.7%. Now, yes, it did rally 28%, but I don't know that Netflix stock has really changed that much. They are raising prices. They still say that it's a good value per viewing hour compared to what a lot of other streaming services have. So you're going to watch more Netflix. Yeah, you might pay a little bit more, but you're getting more use out of it rather than, say, a Disney, right? Where, the kids might watch Disney. You might find something on Disney, but more people are watching Netflix for longer than maybe than what they are watching Disney for, or Paramount, or whatever other streaming service. So you're getting more viewing hours for your dollar out of NFLX. And I do like that stock, right? Number 2 was going to be SoFi. This is the ones that I'm looking at for the investing challenge for this week. Other ones, they aren't hitting my radar because they've already gone up too much, or I don't see the catalyst for them going higher. Adobe is one of the ones with the catalyst that's not really intriguing me as much. And there's another one that I didn't add to this list that is on here that I did already talk about, but I'm going to mention that one next. So this was actually number 3 in the order of stocks that I wanted to buy for the investing challenge was SoFi, but this thing has already gone up as well. We're seeing a big move for SoFi. The tape is friendly, but stock still has work to do, right? They did get down lower. They rallied on some of this news. Is it going to get above 2250? That it has acted as a ceiling where rallies have recently stalled. Downside 1650 has been the level where demand tends to appear on pullbacks. So if it gets down to 1650, that's your point to buy this thing. At 19, I still like it. I don't know that it's as strong right here. We're kind of in this no man's land, but I do think that this stock has room to go. And I believe, let's see here. Let me get to this article. And we got 5 million children have signed up for Trump accounts, with about 1.2 million eligible for a $1,000 government seed contribution. Bank of New York Mellon. Treasury Department designated Bank of New York Mellon, or BNY. And yes, the Trump accounts program with Robinhood acting as a brokerage and initial trustee. All right, so there is some benefit to Robinhood here, and maybe not as much for SoFi, but the fact of the matter is that they have more people sending and receiving money through their Galileo platform, which has been very beneficial to them. So I do like that. They do have that news bringing them up. There is a lot of good things going on for SoFi, but there is a lot of competition out there as well. So I am taking a look at this. I do like SoFi. It's number 3 on the list, but it's out of order because I wrote them down before I numbered them, and I didn't look at my numbers when I was reading them back to you guys. So number 2 out of order is Celsius. I still really, really like Celsius. The fact that we've bought this thing, it was higher to start the year. It was at 48.13. And now we are sitting at 35. I still really believe this stock, with the merger and some of the things they got going for them, really can have a nice move higher from here. There is about 92% of upside from ticker CELH. I like it. I think it's worth buying. It's probably one of the ones that's higher on my buy list right now. And I think we can have a great amount of upside here. Even on the low end, you're looking at 24% from the analysts. Now, some of these numbers are old. Doesn't really account for the fact that the prices drop down to 35.25, but you still do have a significant amount of upside here. And I think the growth could be similar to like a Monster Energy, which is just one of the best stocks that has been in the market in the past 20 years, right? And a lot of people just miss that one. A lot of people think that the fact that it's an energy drink stock, that it couldn't have simply done anything, right? MSFT. But the Monster has actually been one of the stocks that has done really, really well. If we look at let's go to the all-time chart. Let's see what this thing did. It started out as a nothing burger. It was down here at 2 cents. And that was when? That was back in 95. If we go up to 2004, it was 35 cents, and now it's $76. So yeah, if you were even 10 years ago, say we were looking at this thing in August of 2016, it was at 24. It's tripled since then. You can't really be too mad about that. But I'm thinking long term, I think Celsius could be on this type of projection where it is really a great stock to own long term. The fact of partnering and being acquired portion of their business by Pepsi, I think is huge for them as well. Next up was going to be Microsoft, right? I still really like Microsoft. It was a $473 stock at the beginning of the year. It fell down to around $360, $355 on that was actually April of last year. I don't want the all-time chart. I want the year-to-date chart on this one. So we are looking at a stock that dropped down to, $356. That's about the same as last April, but it did hold this level. And then we just rolled right up from there, $356 to $422. Now, this one, we did just have a 70-point move higher. So I'm not as inclined to buy this. It isn't back to where it was to start the year. But I'm not as inclined to buy heavy right now as I would be in Celsius, because Celsius has not had that move higher yet. A lot of fear around it, a lot of fear around consumer staples and spending. And are people going out? Are people spending more at the gas pump so they're not buying energy drinks? All those questions plague a lot of people until we know a lot of what is going on with oil and fuel and consumer discretionary and how much money we got left in our pockets if unemployment's rising, if a lot of different things play out. Microsoft, the fact that it just went up 70 points, I'm not as inclined to buy it. Celsius, I do have a belief that if you give it a 24-month window, there could be more problems in the world, but I still think that this one is going to find a path forward. Nike is my number 5 for this week. And the fact that Tim Cook's buying, you got Elliott Hill, the CEO of Nike, buying, the fact that I was buying, like I told you, maybe not $1 million, but yeah, I bought $500 or something. I still like the stock, guys. I really do. The fact of the matter is they have to prove it. They got to prove it. And right now they haven't been proven much. So it's definitely a case of it's undervalued. The directors know it. The CEO knows it. Other people are purchasing it. You're getting a great dividend yield when it comes to Nike stock at a 3.6% dividend yield. That's fantastic for them. Now, can they prove it? That's the problem. They went woke and went broke, right? We had a lot of those problems. We had a lot of direct to consumer. We thought that was going to be the way through. At the same time, you had brands like Lululemon, On Holdings, Hoka, Brooks, which I forget who makes them. All of those companies were eating their lunch. They were doing the product and doing it really, really well. And they just kind of lost their way. But I don't know that Nike is down for the count. I really can't see that happening. So I really like these names, right? If I had to pick 5 stocks from the investing challenge this week, this is the list, right? It's Netflix, SoFi, Celsius, Microsoft, and Nike. Of that stock list, I'm going to move Microsoft to 5th, right? Microsoft is going to be our number 5 because of the move that it's already had. Now, I really, really do like it long term. I'm not trying to take anything away from them, but that's kind of where I am with it. The fact of the matter is they had that 70-point run. I don't know what tech's going to do. I don't know what software is going to do, but hard to buy a stock after a 70-point run and try to get the gains. Number 4. I'm going from stocks I'd like to buy right now to from least to greatest, but all of them are on the buy list. So they're all in the running, but maybe not all of them are in the same order. Number 4, I'd probably go SoFi. The fact that it is kind of in no man's land in between those highs and lows of 1650 and 2050 or 2250, I think it might have been. I like it a lot. I think it can go higher. I like what they're doing. I like the product. I like the customer acquisition. I'm just not too certain about the price, right? That is one of the things here with SoFi that makes me a little bit nervous. We're at a 1940. We got down to 15. This was the spot to buy it. But now that we've watched this thing run back up, 25%, give or take, in a couple weeks, it's a little hard to buy. It's a little bit hard to want to buy that after we just had that massive run. So that's going to be number 4. I really do like the stock. I just don't know that it's the one that I want to put the $200 into this week. Number 3, man, of the ones left, we got Netflix, we got Celsius, we got Nike. Netflix I think can bounce back by Wednesday. To be honest, I think Netflix can bounce back by Wednesday. So I'm just going to throw that in number 1. That's going to be the number 1 stock for this week. Number 2, I think Celsius rebounds quicker than what Nike does. Do I want to average into Nike? Yes, I do. But I think Celsius could start coming back sooner than later if oil prices come down. I think Nike can bounce back, but they probably have a longer runway. I think if you look out 2 years, I think Celsius has a better runway than what Nike does. So number 1 is going to be Netflix. Number 2, Celsius. Number 3, Nike. Number 4, SoFi. Number 5 is Microsoft. I'm going with number 1, $200 into Netflix for the fact that they fell on some margin outlook issues, but I don't know that this thing it's not down and out, right? They had a 28% run. They gave it some of it back. And now I think we're going to reset. We're going to refocus and move up from there. So that's what I'm doing. Buying $200 in Netflix. I'm going to continue averaging into this market. That's what I'm doing. Hopefully you guys didn't miss out on some of the given or gimme kind of days of the market. Hopefully we didn't sell out and not get back. That is the real concern I had for a lot of you guys. Selling out of positions and then failing to get back into them before the market turned. And now the market's turned. We're at all-time highs. And did you get back in? That is one of the things that I've tried to guide you guys to not panic and look at as an opportunity rather than a curse, rather than just, I'm getting wiped out. Because my accounts are at all-time highs now too. So like I said, 3-4 weeks ago, I was down 6 figures, and now we're back up to where we started and then some. So hopefully you guys can say the same. I put some money in April 6th, right before Civilization Ending Day. And yeah, I hope you guys can say the same. That's kind of why I'm here, is try to ease some of these burdens. Please make sure you like, follow, and share. It does mean a lot to me. It does help the channel grow, and I appreciate you guys for being here. So thank you very much. A little bit longer than I was looking for, but shorter than the first time I tried to record this one. So thank you guys, and appreciate you stopping by.